Hi, this is Rahul Jain, and in today's video we are going to discuss 7 important factors to keep in mind before investing in IPOs. Without further ado, let's begin. IPOs are indeed a lucrative investment, but there are many risks associated with investing in IPOs that people often don't talk about. Hence, there are a lot of things that one must look at before investing in IPOs. Number 1, valuation. When a company sets the price for its shares in an IPO, it can sometimes be higher than what the shares are actually worth. This can happen due to high demand or market excitement or incorrect assumptions while doing the valuation of the shares of the company. If you buy these overvalued shares, you might face losses when the market corrects the price to a lower, more accurate value. Essentially, you could pay too much for shares that later drop in price. Number 2, thoroughly review the prospectus. The prospectus provides vital insights into the company, including its operations, financial health, associated risks, and intended use of the raised capital. Carefully read it to understand the company's business model and potential challenges. Number 3, avoid market hype. Don't let advertisements and media buzz trick you into thinking an IPO is a guaranteed way to make money. Sometimes these promotions can make unrealistic promises. It's important to do your own research and not just follow the hype. Number 4, assess your financial goals. Before investing in an IPO, think about your own financial goals and how much risk you are willing to take. Make sure the investment fits with your overall plan and that you're comfortable with the risks involved. Number 5, investing in an IPO through leverage can be risky. Using borrowed money to invest in an IPO can be risky. If the investment doesn't go well, you will not only lose your money, but also have to pay back the loan with interest. Number 6, evaluate the company's financial health. Check the company's financial statements for the signs of profitability, revenue growth, and manageable debt levels. Also determine if the IPO price seems reasonable based on these financials and the valuation of similar companies in the market. Number 7, assess competition. Look at the company's competitors and its position relative to them. A strong competitive edge may indicate a more stable and promising investment. Number 8, reputation of underwriters. Check the reputation of the investment banks or underwriters managing the IPO. Well-known and reputable underwriters can boost confidence in the IPO's credibility. So these were the 8 factors that you should keep in mind before investing in IPOs. So that's it for today's video. I hope you found this information helpful. I'll see you in the next one.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.